What's going on, guys? Welcome back, everybody, to Around the Charts here on Debate Crypto on a good old Sunday. Today's Monday, and we've got Evan Aldo. What's going on, man? How you been?
Doing great up in Connecticut, visiting my parents, enjoying a little break from the Miami heat, a little nicer up
Hey,
here.
enjoy it, man. Enjoy it. It's blazing hot down here.
Yeah.
And last but not least, we've got the good Bill Noble in the house. What's up, man?
Hey, man. It's good to be back.
Yeah, man. I'm excited to talk to you guys about some altcoins. Obviously, the market's been, kind of sideways, kind of this summer lullaby, like Evan was telling me earlier outside of the stream. It's, every summer kind of seems to have this like stagnant moment where people just kind of get bored. There's been a lot of chatter, right, about Bitcoin ETFs, and people have been very excited with BlackRock and institutions getting involved with Bitcoin ETFs. But the altcoins have kind of been stagnant, right? People have been expecting, hey, when's this altcoin season going to happen? When are these alts going to pop off? So let's take a quick look at the market, in general. I've seen some have been kind of pumping here, and then we can start getting your thoughts on some of these altcoins. So share my screen here real quick. Quick little refresh. Yeah, total market cap is up 0.85, still what that 1.19 trillion. Bitcoin's up 1%, guys. Woohoo! 30,500, right? Hitting we're probably going to be hitting some decent resistance here. So we'll probably take a look at that. Ethereum at 1889. Everything's up about 1% or less. Altcoins in the top 10 are basically doing the same thing. Polygon's had a nice little move in the last 24 hours of 6% for sure at 73 cents. But overall, things have been pretty stagnant. Nothing crazy happening, right? None of that altcoin season fever happening just yet. So before we jump into the charts, how are you guys feeling? What do you guys think about the altcoins right now compared to all the things that are happening with the Bitcoin ETFs? Why don't we start with you, Evan?
Yeah, so I mean, we're in that, big accumulation phase, and I'm always a big, I like to look at what happened before. And obviously, the accumulation years so far were 2015, 2019, and now 2023. It's every 4 years, and it's kind of crazy how much history repeats. It doesn't repeat exactly, but it repeats very similarly to the last 4 years. So in terms of altcoins right now, some of them absolutely could be bottomed against Bitcoin. AVAX looks pretty good. Solana absolutely could be bottomed against Bitcoin as well. But the majority of them, just like in 2019, the majority of them I don't think are going to bottom, at least for a few more months. Also in 2019, we saw Bitcoin dominance rise. We're at about 51, 52% for Bitcoin dominance right now. On those charts, nothing looks overwhelmingly toppy for Bitcoin dominance. Some smart people are saying 60%. I think that's a good goal. I think we'll at least get to around 55% in the next couple months and clean out some of the altcoins. So basically right now for long term, I think unless you really have to have an altcoin, unless you really study these altcoins and know what you're doing, altcoins and NFTs are going to be risky business, I think, for at least the next few months. But, obviously we just look at history. If you bought Bitcoin at the end of 2014, you not the exact bottom, excellent place to get in. If you bought Bitcoin at the end of 2018, excellent place to get in. 4 years later, 2022, excellent place to get in. 4 years from September of 2019 is where ETH and a bunch of altcoins, ETH, Cardano, and many altcoins, but all the ones that survived basically bottomed against Bitcoin. 4 years later would bring us to September of this year. So that's the real sweet spot. So me personally, I'm like very heavy Bitcoin accumulation right now, looking to start ETH and a bunch of other altcoin accumulations in a few more months. There's a few altcoins I'm dabbling in a little bit, like AVAX, just a little bit here and there, because I just a little bit of FOMO. But overall, don't get it too complicated. This is Bitcoin accumulation season.
Great analysis, dude. I really agree with a lot of things you're saying about the accumulation of Bitcoin, and the time frames of people getting in, right, have been in the long term great moments. Just want to give a quick shout out to Crypto Blood in the chat. Guys, I appreciate everybody out here. Smash those likes. Make sure you go share and follow these guys on their YouTube channel. Their link is down below in the description. But Bill, what are your thoughts? Would you agree with Evan, or do you have a different take on what's happening?
Yeah, he's pretty much right on the money. I mean, when you have early cycle action like this, alts can't hold a bid versus Bitcoin for very long. I mean, you can have, Solana move, and then maybe Matic move, and then maybe ICP move. So instead of a crypto market, you can have a market of cryptos, right? Where, one or two can move, on catalysts or just because maybe no one owns it. But Bitcoin is going to be king. Now, again, with altcoins, maybe you could bring in I can bring in a little macro. Long-term bonds don't trade very well. And stocks, to me, look very toppy, like very toppy.
Ooh, tell me more about that.
Well, in the fall, there's a lot of GAN, solar, lunar analysis pointing towards, probably some sort of serious correction. There's also some signals, about a bottom in silver, a bottom in gold, and possibly even a bottom in oil. So when you have a 3 to 4 month period where, you've got risky action or risks to the riskiest assets, at least in legacy, that's going to put a damper on an altcoin uptrend, right? Like Bitcoin has to do its Bitcoin, its trend, but altcoins may only rally like 2 or 3 at a time. So you're going to have to pick your spots. And then again, with equities, if you have weakness in things like Tesla, maybe even Apple, it's going to be hard for the riskiest of riskiest cryptos to rally. Now, one check on that. Bitcoin outperforms, like if, say, stocks go down or altcoins go sideways and Bitcoin holds up tough, that's a message about what's going to happen in the next cycle, that the next cycle may have already started in a way. You can get a dip to Bitcoin, I think. You're going to get one, right? But if stocks top or if risky assets have problems, let that get out of the way before you like really start FOMOing into altcoins.
Yeah, dude, I like what you said there about Bitcoin showing some type of strength if the stocks do start to go down, because we are going into an election year next year, right? And we've got like 4 to 5 candidates that are all talking about Bitcoin on the main stage. And I think that could propel, right, and hold up Bitcoin's price in these big conversations. And during a time where maybe the stock market or the bonds market isn't doing so well. And I think that's going to really set the stage for cryptocurrencies entering the next bull cycle. And like you said, right, maybe when we look back, right, in the next cycle, we're like, yes, the bull run had been started in the summer, right, or was starting to begin in the fall of 2023, but we never know it until later, right? Hindsight is 2020. But I think people need to be aware of stuff like that. People get bored and quickly start to check out and think it's never going to come back, but you might be a lot closer to the beginning of the next cycle than people actually realize. So I hope people are paying attention and take listening to that wisdom right there. So talking about some altcoins popping off more than others, we got to find altcoins that are resilient right now in these markets, that are actually competing and resisting the Bitcoin dominance. Because I believe Bitcoin dominance is at 50% or reaching 50%.
It's around 52. It's held 50 for a good amount.
Okay, yeah. I thought I heard something like that, which definitely is, making, Bitcoin dominance goes down, altcoins go up. But, some altcoins are more resilient. And I think one that has been very resilient is Matic. And I'm going to be showing my chart here real quick. So we're starting to use ChartPrime on the show, and we're going to be using it here, starting to learn with you guys, right? But use you guys as confluence. Do you guys agree with what ChartPrime is saying, and show us your charts to see what is going on here? So as we can see here on Matic, 4-hour chart, right? We've got the dynamic reactor, which basically is an up and down trend, along with volume indicator, which is this orange to blue line as well. Matic has been obviously above that. It's green. That's good. The trend assist here is green as well, showing that it's an up movement. The prime score is saying that, hey, this move is strong. It's a score of 1 to 10. 9 is saying it is a strong movement. It's a mid consolidation score, so it's moving pretty well. The oscillator down here is kind of reaching this red bar, which is that kind of overbought territory, I should say, overbought territory, even though we're in the green ribbon. we did just hit an orange square on it, which is showing overbought. And then if we get one of these red triangles, that's going to be a signal for reversal, right? To definitely start coming down. RSI is also overbought, and their trend, their volume, their trend fusion oscillator, bit of a mouthful there, but it is showing that this little cloud here, you guys might not be able to see it too well. It's kind of like the money flow. It's kind of, starting to taper off, even though it's showing a little bit of an uptrend here. I don't think this trend is sustainable. If you were able to get in down here at 67, this would have been a great trade, right? Because down here at 67, the oscillator flipped from bearish to bullish and started to move along with the RSI, and this trend fusion as well also trend to bullish, showing you here. But I don't think right now it's the best time to be getting into Matic for the short term. Obviously, the long term, we're talking about next cycle, $1, $2, $3 Matic. That's definitely not what we're talking about here right now. But what are you guys thinking about this move for Matic? Evan, why don't we start with you?
Yeah, so I mean, Matic, definitely. I mean, I'll show you my chart here, and Matic's definitely shown a good amount. Let me just get it up right here. A good amount of strength, compared to a lot of the other alts I've been looking at today. Matic definitely looks significantly better than a lot of other ones, and it kind of makes sense because Matic's definitely underperformed a lot of altcoins. As you can see, from February, we've been down from, oh man, this was a catastrophic. I mean, down from $1.50 all the way. Let's see this correction right here. 67%. So we all know that nothing goes down in a straight line. And if you look at the daily right here, some good curvature with money flow, that trigger wave worked pretty well. And you're also in kind of this is an ascending wedge, which a lot of times these do break downward a little bit more than half the time, but it can break upward. And it looks like it might be breaking upward right now. Now, you do have this fib level, which is pretty big, also psychological area at around 76 cents, 75 cents. It's going to be psychological. If we could break above there, you might be looking at potentially 90 cents. It would be a little bit of a risky kind of swing trade. And how I would play this potentially is if I was to try to long this breakout, maybe a stop loss over here, first take profit over here, but it would be a little bit risky just given, the general environment and all these altcoins just continuing to kind of get slaughtered against Bitcoin overall. But if I look at this chart, I mean, you also got the green dot buy signal on the weekly. Last time we had this one, like the deep anchor wave over here, microcipher B, you got to be careful. I mean, it did play, you came lower, but then it played out and came up. So you got to be careful with some of these. But a lot of times they do bring you up a decent amount, just like that one or like that one. Let's just see one of the conservative ones, what it brought us up to. So if we were to map this from kind of the bottom there, that would be right around our goal target, around 90 cents, somewhere around there. So I do think this looks a lot better in the other altcoins. Could be wrong in this, but I do think this could be solely one of the altcoins that does pretty well right here. Would be a risky long, but it might work out.
Yeah, dude, Matic is definitely one of those that performs really well in the long term and holds up pretty strong. I mean, even when the bear market started and everything was tanking, Polygon Matic held above $1 for a long time before it was able to break below. And people were just thinking, hey, this thing is not going to go below $1 anytime soon. I mean, I remember we were like 6 to 8 months into the bear market. I think Polygon was still above $1. So it definitely is resilient in both directions, going upward and going down. Bill, what are you seeing about Matic right now?
Okay, my theme for this market in general is over the summer, it's kind of like I call it P&L destruction. So everything that no one owns goes up, and everything that everybody owns goes down.
That's so true, dude.
Right? I mean, when you get sideways, people are frustrated, and you get these environments where you can lose all your capital before the trend starts, right? So, okay, so this is Matic on DeMark, right? So this is a top 13, which didn't really last long. It's a 4-hour chart. Then you get this explosive kind of blow off top. Now, how do you know it's a blow off top or maybe? So this red 5 means, if Matic has been going up, that the trend could be over. And then this 4 is a little bit more scary, meaning this is a corrective wave in a much bigger downtrend. All right.
Ooh.
Now, that's one way to look at it. If they get crazy in Matic, they can take it up to 80 cents. But I don't know. Can we think about this just logically? I mean, if you bought big green candles, I mean, coming off, like the June lows, you did pretty good buying green candles. But if you bought big green candles lately, yeah, I don't know if that gave you a lot of gratification. Like, I know Evan has the weekly turn. And this could be, this could be a market leader. I mean, Solana did its own thing because, Gensler came out, booga booga, everyone sells, and then everyone forgets about the Solana phone. So when it comes to altcoins, I don't want to buy green. I would rather buy red and put a stop in. That's just as how I'm doing it in this type of environment. And frankly, that goes for every financial instrument when you're in summer doldrums. Like, when you're 2020, when you have DeFi summer, right? When you have Michael Saylor coming in and go, I'm paying 20 for Bitcoin. That's a buy breakouts environment. I'm just not sure that this qualifies as that.
I definitely would agree with that. I think that buying altcoins in the green during this state of the market would not be the best choice. No matter what it is, right? Even if it's Matic, even if it's Ethereum or anything, I think it's way better to wait for some big red candles because it's only a matter of time, right? Until we're deep into the bull market. These moves, unless you're trading them, they're not sustainable, right? You're going to see a lot more red than you're going to see green. The green's going to be in the very short term. So unless you're trading it, definitely I wouldn't be dollar cost averaging on a green candle the way Matic has been pumping right now. That's just what I think, and I agree with what you're saying there as well. But talking about resilient altcoins, another one that's been brought up to my attention a lot, and I saw a lot of resilience, was Quant, right? Quant. So I'm going to pull up my chart here for Quant. Where am I? Gotta get used to pulling up my charts now. But yes, Quant has, let me see, pull up QNT, Coinbase. Here we go. Let's wait for these indicators to load in. Come on. All right, here we go. So here for Quant, Quant's been one of those that has definitely been resilient with staying above $100. It's almost like pumping is built into the tokenomics of Quant. So right now it's not looking that great. This indicator right here is telling us as in a bit of a downtrend, and the oscillator is on the lower end. So maybe the ribbon here takes a flip for the positive. But right now it's kind of consolidating this sideways. The consolidation score is high. It's a 9. The prime score is 1. So that means that there's no strength in move, but there is strength in consolidation. And that's what we're seeing here as well, even though it's a downward consolidation. The RSI is also on the lower end, kind of had a little bit of a move today, but nothing to be excited about. EQ cloud, well, not the EQ cloud, this money flow cloud over here is showing that it tried a little bit of money was trying to come in, but nothing of great significance, and it's still also in a downtrend. See if I can see anything else with the others. They have ChartPrime has quite a few. It's 3 main indicators, but the 3 indicators have built in some decent amount of other things that you can see. So they have the Dynamics Pro, they have the Oracle Pro, and they have the oscillators that are down here. We can see that we have some order blocks up here, some medium-sized order blocks at 112, which I don't think we're going to be hitting anytime soon. And we're in this kind of like, I don't even know what to call this, channel, this like sideways falling channel, descending channel. So, maybe I believe if the oscillators don't hold here and they don't flip positive, we could definitely be coming back down into maybe about $95, $98, give or take, just for the simple fact that I don't see any strength happening in Quant right now. What are your guys' thoughts?
Yeah, Quant looks so much worse than Matic right now. Let me show you my chart here. I mean, So the first thing I'm looking at here is like the 3-day, and you're just getting double blood diamonds, a market cipher. I mean, blood diamonds in general on a time frame this high are pretty bad. I mean, the last one we had was October of 2021. Look what that happened there. Now, I don't think it's going to be, that catastrophic, but there absolutely could be, if we see a decline in Bitcoin, there could be for the next couple months into September, October, a decline down, even, maybe a 50% decline down for this. I mean, we've been just so range bound on this. And you also have this kind of head and shoulders here that kind of, is just taking forever to play out. We just haven't seen that move, and you're just coiling up. So when the move finally does happen, I mean, this is from July of 2022. We've been at the same price for essentially a year now. When the move does happen, it's probably going to be pretty significant, and you could absolutely get down to some low areas here. If we look at the weekly as well, you got a red dot. I mean, nothing is really showing too much strength for this. I mean, maybe you could get a trigger wave on the upside on the 2-day, but that's to be seen. That could be, give that a week or so to and reevaluate. Nothing makes me want to really go long at the moment on this. I mean, sure, maybe on the daily as well, you could get a trigger wave, something to try to bring you upward, but we've had a bunch of these, and like over here, just rolled over. Most of these have just been rolling over. You see all the green with these candles, and you just keep rolling over. And what we could predict, that trajectory, all these trajectories downward, you may see by the 1st of August potentially a lower low at $90. This area right here, this low right here, this wick down, that could be significant, 94. But this right now, this is one I would stay away from right now. Now, for the very short term, you get a bullish div right there. If the entire market pumps up a bit more, like I think will with Bitcoin, you could see a nice jump up to maybe 105. But other than that, unlikely to go too much higher.
Yeah, man. How are you feeling, Bill? How are you feeling about Quant right now?
Okay, well, there's the obvious thing with Quant where, you've seen a lot of failed rallies, right? And, in bear markets or in sideways markets, I always tell people beware the failed rally, right? So in Quant, you can see that there was a group of failed rallies at 110, right? There was a group of failed rallies, right, on July 4th. Now, here's what we have on the short term. DeMark is kind of like a reversal signal. It's a reversal system in many ways. The 13 is one bottom signal, meaning that's kind of like the trend has stretched out. And then, the 9, the large 9 is another indicator that, a move may have run its course. So if you see a 13 and a 9 together, you should get a rally. Now, there's a key level here at 102.60. So if these are constructive signals, DeMark works both ways, right? You get constructive signals and nobody is particularly interested in Quant. Nobody wants to pay above 102.60. Then, as you two gentlemen have noted, this has serious problems because, if you have this 9 count, which means a set of conditions is true, like the low is lower than the low 4 days ago. Okay. It's the original Quant system in markets. So, when you have a 9, you can get a 9 on the downside. You can get a counter trend bounce, but if the bounce fails, okay, it's exactly what Evan drew. It's done. So what I tell people in altcoins is I don't want to buy big green candles, but when we're on support, we're at the bottom of a move. You want to see people willing to pay higher prices, right? People don't mind buying it when it's close to 100, but you want to see people willing to pay at 102.60. Now, if they do, this could do okay, right? But like you said, you get a failed rally in this type of a coin, then you got serious trouble. Because if it doesn't rally on this, what's it going to rally on from like a DeMark TA point of view? So I don't know. I would be afraid to go with this if it broke out above 104, only because it's been like destroyed. Okay, but beware the failed rally.
That's good. That's good wisdom right there for sure, dude. I mean, it's one of those that a lot of people talk about Quant is one of those, and it's held up. It had a massive rally last cycle. It might have another massive rally next cycle as well. But right now, even though its resilience seems to not be able to hold up compared to how it was doing earlier in the bear market. So let's hit the mother of altcoins. Let's hit up Ethereum. Let's see how Ethereum is feeling right now, and then we can kind of change it up into the other altcoins. So let me see what I'm seeing here. Let me pull up my chart for Ethereum. Let me get my chart up. Pull up ETH, Coinbase. See what we're seeing over here. So ETH has been having a little bit of a move in the last 4 hours. So nice little green candle. Wait for these. There you go. Indicators moving up. So first thing off right, consolidation score 9. It's been consolidating pretty nicely here at this level. It's been around this level for a bit of time, all the way since June. Yeah, all the way since June 20th or so. Kind of been around this same level of 1800, low to mid 1800s. Still in a downward trend. All right, still the dynamic reactor is red here. We're barely just getting above it right now. The volume flex still, we just got above it, kind of just been sitting on it for a bit. Oscillator down here showing that the ribbon has been flipping to the green, pushing this little bit of a move that we're having right now. RSI is kind of showing that we're approaching that overbought territory, kind of getting to that 69, 70 level. And then this last trend oscillator obviously also flipped bullish here on the cloud, is showing some money flow diving in, which turned green, and which is also explains this pump that we're having. See if we're seeing anything else up ahead. We're seeing an order block that's kind of high here, about 1970. So we're definitely going to probably hit some resistance like we did in the past up here. And yeah, we broke out of this massive freaking, I don't even know what we call this. What do you call this? An ascending triangle? I'm not even sure. But we broke out of this, but we broke down to the downside. Don't know if we're going to be able to recover from here. This is just a mini retest before coming down lower. What are you guys seeing?
Yeah, so ETH is, let me show you my screen here in ETH. ETH is interesting. So the first thing that I'm looking at, obviously, is we had a nice, this time frame was pretty bullish in terms of, you see the bullish div here on the 8-hour, and you got some gapped RSIs curving up, which is going to be bullish as well. So this is a pretty bullish time frame. It's been kind of that choppiness, kind of like Bitcoin, a little bit different. It's, Bitcoin made a higher high. ETH has really been lagging around. So ETH's high was here. Bitcoin made a higher high from this high. ETH is getting killed against Bitcoin. And on the grand scheme of things, what I'm looking at is you kind of have a weird like head and shoulders you could be forming, something like that. If we do bounce around, we could be kind of choppy in these areas forgive me, a lot of lines here, but we'd choppy in these areas and for another month into August, then maybe break down for another test of like 1200, something of that area. But in more of the short term, what we're hitting right now is going to be, we're getting very close to this fib level, which we are touching right now, and nothing too bad just yet, but it could be a potential kind of scalp short if we do get another momentum wave, a lower momentum wave here, and a bearish div for Ethereum. Then you'd probably reject from that area. The top of your volume range right here is at about 1918, which is a really big point to look at. And we've kind of been, it's been a little weird with ETH, but we've been kind of playing ping pong between these two areas. See, up to that area, down there, then you kind of had a fake out, and then you came back down. Maybe we'll retest kind of that area. And you also, here's another head and shoulders. And if you guys aren't familiar, head and shoulders is typically a bearish pattern. May form another head and shoulders here. If we break down from there, your technical target is going to be approximately at, let's see here, necklines around there, approximately at this fib level or around this volume area low, right at 1775. If you break below 1775, theoretically, you could draw from, that's the volume area high from this range. Theoretically, you would have more of a technical target at this low, 1640. The other thing for ETH and the macro, which is interesting, I don't know if too many people have been talking about this, but I was drawing out what kind of looks like a Wyckoff accumulation pattern for ETH. And right now we would be in around phase C of the Wyckoff. And Wyckoff is basically just you're choppy. It's kind of ping pong. You're just here, up, down, up. And then in phase C, typically you come down. Sometimes in phase C, you could even make a lower low, which is definitely not out of the question for Ethereum come September, October, if things get really hairy for altcoins. But after that, that's the big place to get in. It would coincide with my theory of September, October, just like last time, being where ETH bottoms out against Bitcoin. And then from there, you're kind of home free into the next bull run. So for Ethereum on the macro right now, especially how I drew this too, gapped RSIs coming down, you do look pretty bearish. Also, you could be forming a head and shoulders of momentum waves in market cipher B. So short term is more bullish. I think we come up a bit more in the short term, but long term into September, October, it seems like we're going to have some type of pullback here.
Very interesting on the Wyckoff for sure, dude. Yeah, I think that's pretty accurate. What do you think, Bill? What are you seeing for Ethereum right now?
All right, so at the macroeconomic level, ETH always does well when precious metals do well. So I'm seeing a bottom in precious metals. Now, if you go to like Ethereum versus Bitcoin, right? So you had this big downtrend, right? Obviously, ETH just got killed here versus Bitcoin, and the measure actually made a new low. Okay, now I have several interesting DeMark indicators. There's the squint factor here, but this 5 means the 5 wave, meaning in Elliott wave terms, the move could be over. The DeMark system will sometimes add a 0, meaning that's the end of the downtrend in ETH versus Bitcoin, not permanently, but at least on a higher time frame daily chart. You've got the 13 bottom on ETH versus Bitcoin, and then you have some real strength today where ETH underperformed and now ETH is doing well. So if that green number 1 stays there, meaning people are willing to get involved in Ethereum relative to Bitcoin, you could be looking, at a serious bottom, at least in ETH versus Bitcoin. Now, if you go to a daily chart of ETH, this is like miniature size, but this diagonal line is support. So you could have something like, the bigger the base, they hammered on this support. And, I don't want to say the higher into space, but, having ETH print 2000 is possible, right? In other words, everyone has given up on this, right? If you go to a 4-hour chart of ETH, here's another good sign. You got the 13 bottom. It didn't do much, but then these 2 candles right here, people showed that they wanted it, right? That number 1 after the 13. In other words, people are willing to pay higher prices for ETH. So, could ETH go to 2000? Yes. Now, to Evan's point, ETH is an altcoin. Altcoins generally don't hold a bid versus Bitcoin in this stretch of the cycle. However, one of the things that can happen, like I said, this P&L destruction, everyone may be looking at ETH at 1870 and go, well, this is boring. And then it goes to 2000. And then the next thing you know, crypto Twitter will be like, oh my God, the next cycle has started, alt season, buy everything. No. Because Evan could be right. September, October, you could wake up and risk assets could have major problems. Okay. So at a tactical level, yeah, I think ETH can go up because Bitcoin dominance. I mean, if you just look at Bitcoin dominance, right, this is like regression channel. Bitcoin dominance would go up a lot, and then it made this diamond over an 80-day period. Then Bitcoin dominance went straight up. And if it happens to follow this regression channel, you could be looking at a 65-day consolidation in Bitcoin dominance, which, either Bitcoin goes sideways or the occasional altcoins pop off. And I don't see why ETH wouldn't be one of those altcoins. Okay. That said, you're not going to do well trading off crypto Twitter in this environment. Everything goes down. Binance is going down. It's over for crypto. ETH goes to 2000. We're off to the races. Don't. You can do that after October.
Dude, that's perfectly said. 100%. People trading off crypto Twitter is some of the funniest stuff ever, right? People instantly go bullish, instantly go bearish. I mean, they flip faster than candles do on the charts on Twitter, and it's definitely not the best way to handle trading or any kind of investment at all. And talking about data and talking about whether it's bullish or bearish, Pancake here says if the CPI data comes in good, I'm assuming he's saying good or cool, the crypto will rocket, skyrocket. What do you guys think about that? I believe we got some CPI data coming out this week, correct?
Yeah, I think it will be good for crypto if the CPI data comes out cool, but it's not going to make it, just skyrocket all of a sudden into a next bull run. That's not really how it works. I mean, most likely, even if the CPI data does come in pretty cool, most likely the Fed is going to raise at least one more time. I think it's around an 80-something% chance that they're going to raise at the end of the month. This could absolutely be the last raise. But the thing is, even if the CPI data comes in kind of cool, it's still, we don't know the next one. Next one could come in hotter. And inflation still is relatively bad. I mean, I'd be surprised if we see a pivot before sometime early next year. I think we're going to have a pause for a while, 1 or 2 more rate hikes, and it's going to be probably a long pause where we're going to continue to feel the effects of those rate hikes. And I think Bill's probably right with the sense that traditional markets can feel the effects there too. I don't know if I necessarily agree with Bill on gold and silver coming up. I think they'll hold up very well against traditional markets, but I think they could still see some type of, from what I'm looking at on the charts, some type of pullback. But I think it's going to, especially as we get into a recession, I think gold and silver are going to hold up very, very well against traditional markets.
Dude, you brought up a great point about the gold and silver, which I want to circle back to, but I want to get Bill's thoughts on the CPI data, and then we'll circle back to the gold and silver thing. What do you got?
All right. So I used to work at Schwab. There's a bond strategist, Kathy Jones. She works there. She's like OG for fixed income strategy. She's got a nice metric that shows inflation like rock solid, stuck at 4%. Right. Now, if you look at this Bloomberg headline that I've got up here, Fed officials say higher interest rates are needed to get to the 2% goal. So let's just follow how the Fed would think about things. So first they was like, ooh, I have this minutia economics nerd data point and I don't like it, so I'm going to hike rates. Then when that goes away, like when, I don't know, it normalizes or it comes in cool or whatever, then the Fed goes, oh, well, just kidding about that one. We really meant this one. Now, I think the ultimate Fed indicator is the stock market, right? Fed officials say higher interest rates are needed to get to 2% inflation is a nice way of saying all you people who have bought NVIDIA, watch it go up, right? All you people who have bought Tesla, go to a market cap that's greater than the entire audio industry combined times 2, practically. You guys better think again. We are not going to stop tightening, right, and risk inflation getting out of control. Because if you look at history, right, if the Fed pauses, this actually happened in 1980, as I understand it. When Volcker, the Fed chairman, paused, okay, inflation then rocketed higher, and then he had to go crazy and raise rates to 20%. The Fed knows the history, and they're going to probably err on the side of, over tightening or being more aggressive because they got tons of room to be more aggressive because the stock market is so high, right? So yes, can there be rallies? Can Bitcoin hold up? Of course, right? In other words, these data points, you trade them like one day at a time, but one of the other summer doldrums, P&L destruction things that I like to talk about is don't make too much of one day, right? Don't make too much of one day because again, if you look at stocks, right? Just take a look at Tesla. Take a look at Apple. Do you realize Apple is worth more than the entire crypto market cap? Apple's worth more No, 3 trillion, right?
Yep.
Apple is worth more than all of crypto.
It's
Now,
worth more than the Russell 2000, I think, too.
right. It's just, it's enormous. So I don't know. I'm not saying anything bad against Apple, but if you look at Tesla, there's a 13 top here, right? You had your blow off top new high, and then all of a sudden, it's kind of going red. Now, in equities, you've never really had a kind of a summer rollover. A lot of times you get it late summer. But in this particular case, kind of have to ask yourself, does the equity market smell a tougher Fed? Right? Like, if I was Jerome Powell, I would stand up at the microphone and I would say, I'm going to do 25 basis points today, but if you guys think that I'm going soft on inflation with inflation at 4%, please think again. Okay? Because, if you go to the bond market, just quick here, if I can get there, right? You go to the bond market and you look at just some basic like TA textbook page 60 type of stuff. All right. This is the yield on the 10-year note. It's like a 10-year interest rate for the US. This is a triangle. This is a breakout. This is a return move. Right now, the 10-year is at 4%. It could go to 4.5% if Powell talks tough. So, you have to be flexible in these environments because, you want to have capital for the bull market because this is, you could have stocks and bonds have problems, each of them separately over the next 3 months. That's why I'm not like, buy green and everything. You want to have a small Bitcoin position so you're involved, you stay calm, cool. But, don't make too much of any one particular data release.
Dude, that's actually great advice when it comes to these like CPI numbers, and every time they come out with a federal rate hike within the Fed minutes and whatever, right? People on crypto Twitter get all types of crazy about that. And it's like they make this big thing and it's not sustainable. Even if the market does pump right off the CPI data, it's only going to pump for a few days and then it's going to come right back down to its natural state of where things are in a more bearish trend. So it's not going to like Evan said, it's not going to blast it into a bull market, right? It's just going to see a mini pump, but that's normal in these type of things. But it's just overhype. It's not anything great. Was it wrong? Said, guys, tell me what you guys think about Binonomics. I'd rather have Noblenomics. That's right, Noblenomics. Let's go. That should be the name of your book. If you write a book, Noblenomics. There it is.
There it is.
I wanted to circle back to the gold and silver that Evan was talking about earlier. So I made a TikTok talking about how the BRIC nations have announced that they're going to be announcing a gold-backed currency in their summit coming up here in August. People on TikTok got crazy about it, right? And kind of saying that the BRIC nations are overhyped. They're nothing to be. It's a waste of time to consider them. That don't even pay attention to the BRIC nations. They've got nothing going on. Their currency isn't going to be worth anything. The gold is fugazi. What are you guys' thoughts about, you were talking about gold prices and these BRIC nations, whether they announce this gold-backed currency? Bullish, bearish? Is the US dollar in trouble? Overall, what are your thoughts? Evan, why don't we start with you?
Yeah, so I think on the macro, like obviously very bearish for the US dollar. Now for the next 3 months, next 6 months, or even next year, it's hard to say. It could be that could price could already be factored in, and DXY could, see a big jump. Now, I also think on the macro, next 3 to 5 years, very bullish for gold. And I'll tell you on the charts right here what I'm looking at in gold. Now, let me just get it up right here. What we're looking at, if we look at I believe it is on, we probably got to look at, the monthly here. Nice cup and handle pattern. Like, look at this. This is a textbook, just really nice cup and handle pattern. And your technical target for this, I believe, is going to be at around 3,000, which I do think is going to be, this could take gold as a tortoise. Gold is a turtle here, a tortoise. It takes forever to do anything. I mean, you may not see that until 2025, probably the earliest in 2025. If gold does follow kind of the crypto bull run, which it does a little bit here, like in I mean, obviously the 2019 second half, this was actually interesting. Yeah. Second half of 2019, while crypto came down, gold did come up a bit more there. So if we see crypto and traditional markets come down, kind of what Bill was saying, maybe gold does have a shot to keep going up here. I don't know. You know, it's tough to say with the kind of the short term on gold, but I think next 3-5 years, maybe even out to 2027, I think you're going to hit around 3,000. I mean, let's just take this for the cup and handle. We could take this, you know, trajectory here. It's this trajectory. And then when you break out of it, neckline's there, 3,200. I mean, that's a sizable gap. And if we go back to kind of, you know, this rally here, this is '01, you had an amazing decade, you know, right here for gold. And obviously, you know, back to the 1970s, that was insane. I think it's going to be a diminished return type thing. Like, I don't think we're going to get, you know, this type of return for gold, because a lot of this money is going to go into crypto and Bitcoin, which probably will outperform gold over the next 10 years. But 600%, maybe you could get in the next 10 years half of that or something, you know, 200 or 300% by the end of this, sometime in the early 2030s. Last thing I'll show you right here, gold versus SPX, gold versus the S&P 500. There is an interesting rare bullish sign here that I marked out. This arrow right here, look at the money flow. This was in '01. You came up like a ton, and you had that 94 jump up just out of nowhere there, probably at the start of kind of that recession. And then back here, same thing happened. This was 1971, where gold outperformed the S&P 500 by a lot. This outperformed it, you know, by 20x. Over here, it was 600% diminished returns, severely diminished returns, though. Maybe 200 to 300% we could get back here with gold outperforming the S&P 500. But a lot of this money will go into Bitcoin instead. But I think gold is a good hedge, and I think it will do very well against the S&P 500 over the next 3 to 5 years.
Nice. Bill, what are your thoughts on the whole gold and the BRIC nations, whether they do their gold-backed currency? How do you see that playing out? Is it possible? Is it not possible in today's age?
Well, the BRICS countries want to get off the dollar, right? I mean, if the Fed raises rates 500 basis points in 9 months or a year, you know, that's going to have dramatic impacts on their currency, and they got no say about it. So they want to do something different. I get that. Now, one of the things that people had been talking about was the Chinese currency as the world reserve asset. You know, that's nice content for Yahoo Finance, but I don't think that's going to happen. If there is going to be a new global reserve asset, it's probably going to be gold. Now, gold doesn't move fast in a sort of like our recent memory. But you do have to remember that gold is a commodity. And prior to crypto, the fastest moving instruments out there, the speculative wild stuff, is commodities. So gold can move if it wants to. Now, if you look at this chart, I don't know. I mean, this is like your basic tactical stuff. I call this draw a pretty picture, TA, right? You have a regression channel, right? Gold sits at the bottom of it, making a base. Bitcoin has already launched itself. So, you know, gold can take off. However, as we've noted, if rates are going to go higher, if there's risk of that, you know, yes, you do have a nice 9 bottom in gold. Yes, it seems to be holding, but you don't have the 13. You have a 10. So if something goes wrong in gold, you could have 3 more down days. All right, now back to the good news. This stochastic down here, DeMark makes, I call it a smart stochastic or a smart RSI. And it'll actually flash sometimes when, hey, like when it makes that pink square, it's like, hey, guys, you know, pay attention down here. Pay attention. So this thing has been flashing the whole time gold has been getting pressured lower. Now, this is what I'm thinking. I got what I call finked, as in Larry finked in June. Was my theme was like I or buy in July and let it fly. Okay. And they did the whole rally at the end of June. They just took it up, Bitcoin. And I was like, wow, I got caught sleeping. I don't want to get caught sleeping in gold only because the dollar has absolutely no bid at all. Like The dollar is done for so many different reasons. Mainly, I think the biggest one is nobody is pushing money into the United States to buy our government bonds. That's the major decline, in demand for dollars. So, Bitcoin went first, gold should follow. And, I don't see anything for the dollar except a sharp kind of re-rating down and gold following with the spike. Is that going to happen today? I don't know, but I got caught missing Bitcoin. I'm not going to get caught missing gold.
What you just said there about people not putting, governments or institutions, whatever, putting money into the dollar and the dollar being in trouble. So many people refuse to believe that fact. The TikTok that I made, it's got like 5,000 views, and everyone's arguing that I'm crazy, right? That that the US dollar is perfectly fine. There's nothing going to defeat the US dollar. That, like they don't know history. They don't understand that every currency in mankind has collapsed at some point, and it's all been due to manipulation of the currency, which the dollar has been experiencing for a long time, and even has been even accelerated since the whole fog around the world started back in 2020. That accelerated the decline even faster. Now we're having nations. Yes, are they the most powerful? Do they all get along? Maybe not, right? But them consolidating and coming together against the US dollar shows that there is a trend, that there is a movement to start getting away from the dollar. I understand that other countries have done this before, right? Gaddafi tried to do this in Libya. He got a big dose of freedom, right? And a few other countries down in the Middle East have tried doing the same thing, trying to release a gold-backed currency, and they've all failed. The United States have come in and said, "Hey, it's not going to happen," right? But this consolidation, I think people need to start waking up to the idea that it is possible for the United States to not be number one, all right, to drop in that ranking. Not that we're going to disappear. We're not going to become a third world country or anything, but competitors are arriving to the table when it comes to economies and and finances and markets. We're seeing Dubai, doing great things out there when it comes to investing and business, things that we're not seeing in the United States. People need to realize that no matter how big the empire is, they've all fallen before. The United States is no different and should not be treated differently just because we are in a modern age. Everyone thought that they were in a modern age in their time and that their empire was the greatest and that there was never be a greater empire, and they've all fallen. So why are we holding the United States to a different standard? That's what I want people to start realizing, that it can happen to the United States, and we could be seeing some of that happen right now.
100%, man. Very well said.
Appreciate it, dude. Yeah, it's just one of those things that kind of triggers me sometimes when people are just so ignorant of the fact that we could lose. There is no God-written rule that the United States will remain number one forever, and nothing can nothing can prevent us from falling. People need to realize that, and that's why things like gold, cryptocurrencies, Bitcoin, just understanding finances in general. One of these reasons for this show is so that you're not just reliant on holding US dollars in your bank account. We've seen what the banks do with your money. They go and play with it. They go and do risky investments. They are investing. Why aren't you investing? Right? Why aren't you making your money work for you? Why are you giving into the bank and letting them make it work for them and make money off your money? Yeah, you're not making anything. And when the greatest transfer of wealth happens, or there's a shift in power in the world, you've just been sitting on US dollars in the bank account, and you have no assets for yourself that can counteract or hedge any of those situations. So it's just things for people to think about, some food for thought. But closing off the show here, just overall on the altcoins right now, let's say by the end of this summer, bullish or bearish? Evan, why don't we start with you?
By the end of this summer, I would be more, for the majority of altcoins, I would be more neutral to bearish on the majority of altcoins. I would be more bearish overall on the majority of altcoins, versus Bitcoin, especially because if you look at total 3 versus Bitcoin, that does not look good by any means. So I'm sure there's a few that look kind of promising. You know, AVAX could be bottomed out against Bitcoin. Solana could be bottomed out against Bitcoin, but the majority of them, I don't think they're going to outperform Bitcoin for at least until September.
Perfectly said. Bill?
Yeah, I think by September, you need to have your portfolio adjusted, which is a nice way of saying, you know, no effing around in S coins, right? Not at all. You know, get your position adjusted so that you can hold on to a Bitcoin position in the event of a stock market problem, right? You don't want to be long highly speculative assets into September and October, maybe outside of Bitcoin. And who knows, like, you know, you look at some of that stuff Evan did, maybe not even ETH. So I would say it's bearish, but it's bearish in a way where you're in like capital preservation mode, where you're just waiting for the market to come to you in the fall.
Dude, perfectly said. Both of you guys killed it in this last segment. So if you guys can take anything from this 50-minute show, it's these last 2 minutes here, what these two guys just finished saying completely encapsulates this entire show and what you guys need to be doing and paying attention to. So if you guys are not following Bill or Evan just yet, links are down below. Go follow them. Go follow them on Twitter. Go follow them on YouTube. Go smash the likes on them. Smash the likes on this video as well if you haven't hit it just yet. And guys, like always, question everything, trust nothing. And until next time, hodl like it's hot. See you guys.